A similar situation to an earlier example with FedEx stock chart, where a sharp peak transitions into a flatter range. Volume is helpful, but it may not always be adequate, especially when there are charts of less heavily traded stocks. Or if it is a chart of an asset outside the stock market that doesn't have readily available volume, such as Forex charts. Here's a demonstration of clear 3 methods rising and bullish continuation price action. Green bullish volume is not exceedingly high, however it is constant, and that is adequate for this stable rise. Even without the volume, the candle price action alone is more than adequate in clarifying a bullish continuation is establishing this uptrend at a consistent pace. The price action is volatile at times, however it is clear overall, especially as the market encounters natural resistance at the upper intermediate 165 to 170 range, and along the way there are several swing points with familiar candle patterns at these reversal areas. Despite the overall bullish strength, there is expected weakness emerging in the short term due to the approach to the major 178 barrier. Confirmation of increased bearish sentiment with a strong close below the bearishly engulfed hanging man. Additional context to consider is the 170 level offering immediate short-term support that will oppose this downswing developing into a full downtrend. Also, this large bullish candle on October 23rd is a natural short-term obstacle as well to any drop because there is high volume concentrated towards the open and low of the candle, and it can also be the first candle within a 3 methods rising, which is a possibility with these last 4 candles where there is proportionally lower volume with the neutral to bearish price action following the large green candle and its increased volume. Remaining bearish but to a lower degree with decreasing intensity of the price action and volume. The bullish background in the lower 170s helps support the development of a neutral to slightly bearish range within a 3 methods rising that has completed with the recent large green candle, which also has increased volume to firmly close above the 178 barrier. And as usual, the confirmation of a bullish candle pattern, in this case for a continuation above 178, will be a close above the high of this 3 methods rising, which will be the high of this current candle. The next candle trades higher but closes below the high of the 3 methods rising to put doubt into the overall bullish sentiment. This is unique compared to the downswings seen at prior levels and the earlier 3 methods risings, because this is at near record highs, where the 178 level offers comparatively stronger resistance. 178.36 to be exact, which is the highest record closing price of McDonald's at this record high peak, where there was also a significant increase in trading volume. Familiar price action with McDonald's stock price falling slightly, but with lower volume compared to the large green candles. In fact, this can be another possible 3 methods rising candle pattern, especially with this current candle having a longer lower wick at the very short-term support offered by the large green candle's opening price on October 30th, where there was that minor increase in bullish volume. It is indeed another 3 methods rising, exhibiting the same general features as the previous one, which makes for another strong close over 178. Volume begins to level off, but it remains at normal and consistent levels. Here it also closes to newer highs, and if there is a minor downswing, 178 offers immediate support to oppose the development of a further downtrend. A near perfect bullish continuation composed of 3 methods risings to finally break over the firm 178 resistance. There is the natural consolidation range with several minor downswings, but the overall trend is so strong and stable, it manages to avoid directly dropping onto the prior 178 level. Volume decreases to near normal levels but remains consistently green overall. Short-term fear and uncertainty, mainly from the broader stock market, leads to volatile trading. The 3 methods risings and broader bullish background allowed McDonald's stock price to weather this bearish period in the market better than other stocks. Longer-term context clarifies the situation further, as the entire example thus far turns out to be a larger bullish continuation. The key points here are the downswings never drove down price significantly lower, and the lower boundaries held firmly to establish flatter ranges and allowed McDonald's stock price to recover relatively quickly from these shorter-term bearish periods, which in turn created a stable resting phase within this larger bullish continuation. During a later broad stock market decline, these same ranges become highly influential in slowing down McDonald's stock price. Prior to a major bullish reversal composed of a large bullishly engulfed dragonfly doji.